when we thought there were no banks left to attack Bitcoin, just a few hours ago this morning, we have a $21.5 trillion bank who's come out and strangely, coincidentally, cut their Bitcoin price prediction. This is Citigroup, and they are a bank who have been very bullish on Bitcoin over the past few years. And what I find really strange is the timing of this announcement and this attack, because we've seen JP Morgan named, shamed, and exposed for creating that October 10th flash crash in Bitcoin. It got so obvious that they were, let's say, playing shenanigans with the price of Bitcoin that they've essentially stepped away and even created a pro-Bitcoin product. It's nearly impossible for them to attack Bitcoin any further. But once JP Morgan was finished, who else did we get? We got Jane Street, another enormous multi-trillion-dollar bank who again got named and shamed so badly that it would be nearly impossible for them to continue with the same shenanigans that we've seen. And once Bitcoin passed these attacks from JP Morgan in October and November, and then Jane Street in December and January, what happens with the price over the past 4 weeks? Because we've seen something really interesting with the price of Bitcoin. If we look at how different assets have performed since this most recent Iran conflict, something interesting starts to really stick out. We can see that Bitcoin is outperforming everything else. Stocks have been sliding. If we have a look at the price chart of Bitcoin over the past 3 weeks, you can see a very clear trend. Bitcoin has been grinding higher. Meanwhile, other assets like the S&P 500 has been grinding lower since the middle of February. We've seen a very clear trend change over the past 4 weeks. We've got the NASDAQ also grinding lower over the past 4 weeks. And we've even got assets like, let's take a look at gold and silver, also chopping sideways. What is the one asset that is up over the past 4 weeks? Well, we covered this for you yesterday. Bitcoin just had its best week since September 2025. It's finally performing like a safe haven asset. And what do we get? We get a bank with $21.5 trillion of assets under management. No, I didn't make that number up. Have a look at this. Citigroup manages between 21.5 and $31 trillion of assets. And again, I'll remind you, they've been bullish on Bitcoin. Just 3 months ago, they said this. They said $143,000 Bitcoin is their base case. This is on December 19th. What has happened since December 19th that's been so catastrophic for Bitcoin? I mean, it's finally, for the past month, 4 weeks in a row, consistently, it started acting like the safe haven asset that we've all known for a very long time. It is the safe haven asset. Well, let's have a look at what Citigroup said. Now that we've kind of set the table, I'm more interested at the banking system just running through their bullets. Think about it for a moment. We got JP Morgan, we got Jane Street, and just when you think the biggest banks in the world can't attack Bitcoin any longer or can't suppress the price of Bitcoin for any longer, we see another enormous bank come out and once again spread a little bit more FUD. Let's first just show you why I'm so interested at this, let's say, FUD and warning that Citigroup sent about Bitcoin just a few hours ago this morning. So all these big banks are in Bitcoin. Citigroup is literally launching institutional grade Bitcoin custody and wallet infrastructure. They are rolling this out this year. And they just flipped bearish on Bitcoin this morning. But of course, we all know it. Morgan Stanley is filing spot Bitcoin ETFs. They're rolling out spot Bitcoin trading. Goldman Sachs, another huge bank, they actually own $1.1 billion of IBIT's BlackRock Bitcoin ETF. And even the CEO of Goldman Sachs personally confirmed that he owns Bitcoin. He's got bags. And all of these big banks, they are buying a lot of Bitcoin privately. And then publicly, we have to ask ourselves why they're flip-flopping so much and spreading FUD and noise when I don't really know it's warranted. I mean, what we're seeing right now is, let's be clear, let's be straight. It's something we've been waiting to see for 6 years. Bitcoin behave as a safe haven asset. It actually nearly touched $76,000 this morning. But yet Citigroup feels the need to, let's have a look what they said. So Citigroup has officially cut their Bitcoin price predictions. The reason why they're saying this, what is the cover? They're saying, oh, forget Bitcoin being a safe haven asset. Forget the fact that Bitcoin's the best performing asset over the past 30 days. Again, we're not talking about 12 hours. 30 days, it's a lot of days, it's a lot of weekends, it's a lot of time where we've seen a lot of conflict. This entire Iran war has escalated in the past 30 days. Bitcoin has been the best performing asset. But for Citigroup, well, they are more concerned at crypto legislation stalling. So they've said the investment bank has cited that slower ETF flows, weak network activity, and a narrowing window for US regulatory catalysts is their justification for why they're flipping a little bit more bearish on Bitcoin. So what have they done? They've said, look, we expected $143,000 Bitcoin by the end of 2026. And again, they are rolling out Bitcoin trading for their customers and their firms this year. They're not just pulling price predictions out of the wazoo. They're actually physically involved in the asset. They have told their clients consistently over the past 12 months, you're going to get Bitcoin trading. We want to launch a Bitcoin ETF. This is a lot more, let's say, important than just the price predictors, okay? This is why I think this subtle change is very interesting. So they're saying that the Bitcoin ETF flows remain the primary driver, but they are saying that they're cutting their 12-month demand assumptions to $10 billion for Bitcoin. That means they think that only $10 billion of flows is going to come into Bitcoin over the next 12 months. And they are using this as justification for cutting their Bitcoin price prediction and creating a little bit of noise, creating a little bit of FUD at a time when Bitcoin is performing very well. So why do I want to pay very close attention to that figure? They're saying, look, the ETF demand, it's slowing down. But is it? Let's have a look at some of the corporate demand we've seen. We covered this for you guys earlier in the week. Michael Saylor over there at Strategy has bought 40,000 Bitcoin in the past 7 days. It's now 8 days. It's Tuesday. Think about that. Strategy is now buying more Bitcoin than it ever has. This is a corporate institutional holder of Bitcoin. This week going absolutely bananas. And yesterday on the show, we also covered for you guys Metaplanet raising $500 million to buy more Bitcoin. That's a lot more than what, $1-2 billion worth of buy pressure just in the past 8 days. But Citigroup says, yeah, we don't really see more than $10 billion of demand over the next 12 months. That's what they're using as their justification to spread complete noise and FUD. Okay, let's see what else they said. So they said progress on US digital asset legislation is slowing, with the odds of passage this year slipping to 60%. That's what their fancy report believes. They think there's only a 60% chance that we see some positive news coming out of America. Again, let's verify. Is this true? Let's dive into what, say, the US president has recently said about Bitcoin and the Clarity Act. I got a few clips for you guys. Let's try to uncover what's going on.
You you've made America the digital asset capital of the world. We did the Genius Act for stable coins. Many of the people standing up here are working on the Clarity Bill to
I hope that gets done.
Market structure.
Yeah.
And we're bringing U.S. best practices to an exciting new industry, digital assets, innovation, and it spreads everywhere. So the U.S.
And do you agree that
wanting to be the Bitcoin capital of the entire world? Let's actually jump on over to Polymarket, because I want to take a look at the odds of something like the Clarity Act actually getting passed. Because again, let's see whether Citigroup is actually citing realistic probabilities or realistic reasons to be bearish. I want to pull up I found the Polymarket chart, and we can see that right now at the time of recording, this looks to be about, oh, you don't want to zoom up in my big head that close. There we go. That's much more pleasant. We can see a 61% chance of the Clarity Act being signed into law in 2026. Now, what I'm more concerned about is the trend. If you look at the odds here, we've kind of been chopping around 50-50 for the past week. Where's the trend change? Where is this urgent, dire, catastrophic situation changing for Bitcoin that Citigroup feels the need to come out and spread a little bit of FUD? I don't see it. This is again why I'm getting suspicious. This is again why I can't help but wonder, was Citigroup tapped on the shoulder and said, hey, this Bitcoin thing, it's kind of getting away from us. It's up 20% in the past 2 weeks and it's acting like a safe haven. We can't have it doing this. But we've used all the bullets in the chamber. We've used Jane Street. We've used JP Morgan. They've got a little bit too much heat, too much attention. And now I don't know who or what entity is out there, let's say, getting their bank of friends to do them a little bit of bidding. But I seriously think that Citigroup might be the next puppet in this little puppet master show of the bankers trying to manipulate the price of Bitcoin. Again, a lot of people will say, we're going to look at the on-chain data. Some people will say, no, but Luke, Bitcoin's down because the long-term holders sold. We're going to look at that argument because it's undeniable that long-term holders have definitely at least moved some Bitcoin over the past 2 years. They've moved up to 4 million coins. We're going to dive into that. But just keep that thought in the back of your mind. Why Citigroup? Why Citigroup now? They are a $21.5 trillion bank. When they talk, people listen. This is kind of the first piece of bearish news I've seen come out about Citigroup. And again, you can see this new report that they dropped, they revised Bitcoin targets. They came out when Bitcoin was trading at $74,000. So it's not like they can hide behind the point that, hey, we published it 3 weeks ago when Bitcoin was in the 60s and it wasn't really acting like a safe haven asset. It's very recent. Now let's actually have a look at the other thing they cited. So we showed you there's a lot of institutional flows coming from strategy. But what about the Bitcoin ETFs? This is specifically what Citigroup named and shamed. They said, only 10 billion from the ETFs over the next 12 months. This is why we feel like we can confidently spread a little bit more noise about Bitcoin. Well, let's analyze that claim. Let's have a look. So these are the Bitcoin ETF net daily inflows and outflows. You can see, let's play devil's advocate. Let's give them the benefit of the doubt. There's a lot of red here in February. When we had more conflict in early Feb, people were rightfully a little bit scared. But what we have seen, Bitcoin saw one of its biggest green inflow candles on March 4th. We saw $668 million of inflows. It was enormous. Nearly the biggest we've seen since the middle of 2025. Look at this other big green candle. This is on October 7th. So Bitcoin, just last week in early March, had a one-day inflow of $668 million. It was the biggest since October, the biggest inflow day in 6 months. So again, let's go back to the reasons that Citigroup is citing to be so bearish on Bitcoin. Do we believe it? Do we believe that there's only going to be $10 billion of inflows from Bitcoin ETFs when we just saw a daily inflow of 660 million big ones? I don't believe them. They're trying to tell you that that warm, yellow, salty liquid hitting you on the back of your head is just water. I don't think it's water. I'm going to be fair to Citigroup. Let's leave the pissing analogies to the side for just one moment. Let's continue breaking down what they said. So they're trying to say that the Clarity Act, a sweeping US crypto market structure bill, has cleared the House. Oh, but sorry, it still remains stalled in the Senate as lawmakers negotiate competing proposals, leaving its path forward uncertain. Again, like the clip we just played, I don't know how uncertain it would be that some of the biggest Bitcoin holders in the world do not want to push the Clarity Act forward. Again, I don't know. I'm not a politician. I'm just a kid on the internet with a terrible haircut. I have no idea about American politics. But just look at the data. Let's think from first principles for a moment. Who is number 13 on this list of biggest Bitcoin public treasury companies in the world? Trump Media. They personally hold 9,000 Bitcoin. We know that Donald Trump is the mouthpiece for Eric. Eric is the one who's all in, balls deep in Bitcoin. They have a Bitcoin company. Do we really think they're just going to let something as important as the Clarity Act just stall in the Senate? I mean, I don't know. I mean, just think about, well, I do know. Well, I think I know. Think about this for a moment. They've already signed executive orders on the Genius Act, an executive order. Would they really not just sign an executive order on the Clarity Act if it was so important and if Bitcoin needed it so much, like Citigroup seems to think? Do we really think that the Trumps wouldn't just sign an executive order or rush it through or tap some friends on the shoulders and get it done? I don't know. I don't see this excuse as another justifiable reason for why we're going to spread some negative Bitcoin news and say, yeah, we're not so bullish on Bitcoin. Forget the fact that we're offering Bitcoin trading to our clients. Yeah, we're not so hot on it anymore. Forget that $143,000 Bitcoin price prediction. It's over. They didn't say it's over, but they did cut their price prediction. Let's listen in to just remind you guys what the Trump family thinks about Bitcoin. Because Eric, he still sounds pretty optimistic.
We believe in cryptocurrency.
How much crypto do you have on your balance sheet?
We're a private company, so I'm not gonna mention.
Would
it,
you give me a range?
It's substantial.
More than 100 million?
Absolutely.
More than 500 million?
Probably.
That growth in crypto riches has coincided with Trump's second term in office.
I'm going to play that again for you guys.
Substantial.
More than 100 million?
Absolutely.
More than 500 million?
Probably.
That growth in crypto riches has
I mean, I don't know about you guys, but that is the representation of balls of steel. Yeah, I hold $500 million of it privately. I'm not going to tell you how much it is. Think about that for just 1 second. We've got publicly, we showed you the receipts. Trump Media Group owns, 9,000 Bitcoin? And they have to disclose how much they own because it's a publicly traded company. And they've got the 13th largest publicly traded company with Bitcoin in the balance sheet. And then privately, yeah, 100 million, that's chump change. We got way more than that. Yeah, we got more than 500 million, but we ain't telling you. Think about it. These guys are heavily incentivized to be pro-Bitcoin. Heavily. We can see it very clearly. Trump Media and Technology Group Corp. They own 9,000 coins. And we really think that they're not going to force through the Clarity Act. All right, let's give Citigroup the benefit of the doubt. Let's continue reading this report and looking at their justification for why they've flipped bearish on Bitcoin now. And I'll remind you as well, we got a long show in store for you guys today. Citigroup is not the only enormous billionaire who has flipped bearish on Bitcoin. We got some clips to play you from Chamath Palihapitiya. I hope I didn't butcher that name. He's, of course, the man who is publicly on the news in like 2013 saying that he owned a ton of Bitcoin, predicting very high prices. And strangely, Chamath, a man who's understood Bitcoin for 13 years, he's also this week, well, yesterday by the looks of it, came out and changed his stance on Bitcoin. Again, what do we say? When something happens once, maybe it was just an event. It just happened. It was a random, isolated event. When you see two massive, influential banks and billionaires change their stance on Bitcoin at a time when it's performing the way it should be performing, that's when you start kind of scratching your head a little bit and saying, hang on a minute, it's a bit of a coincidence. We're going to get to Chamath in a moment. Let's keep breaking down this Citigroup report because this is super interesting. I can't believe they said what they said. And again, nobody's talking about this. So they're saying the analysts also flagged weakening momentum in the crypto market since Bitcoin's October peak, citing liquidations, positioning fatigue, and prices sitting below key technical levels. Bitcoin may continue to range trade with around $70,000 seen as an important psychological level tied to pre-election pricing. So one thing, we know this report was published at $74,000 Bitcoin. They said $70,000 was a psychological level. Bitcoin was $4,000 above it. I don't really buy what they said here. And they also said, oh, okay, Bitcoin's been weak since October. That's true. Bitcoin has been weak since October. But a lot of the damage was done in, when was it? October, November, December. Again, when was the peak fear for Bitcoin? When you've got JP Morgan coming out and saying that strategy is going to get delisted from the MSCI in October. We've got Inside Whales making hundreds of millions of dollars of profit from shorting Bitcoin minutes, very coincidentally, minutes before a Trump tweet announcing 100% tariffs on China. Again, that's what happened on October 10th. That was peak fear. Bitcoin crashed 25% in a day. And don't forget, Citigroup came out in December and they said this. Their base case for Bitcoin in December was still $143,000. So again, are you really believing that that is water splashing on your back? I don't. I think Citigroup shouldn't be trusted. And again, right now we have huge flows coming from not only corporations, from ETFs. Every argument they have made, it just doesn't pass the sniff test for me. I don't know about you guys. Let us know in the chat whether it passes the sniff test for you. I'm not seeing it. I'm seeing huge Bitcoin ETF flows. Even just an hour ago, we got another $202 million inflow into the Bitcoin ETFs. Now, again, a lot of people will say, oh, but the ETFs saw a $4 or $5 billion outflow. That's true. But let's put that into context. Again, I'm really going to try to make Citigroup look, I'm going to play devil's advocate. Because we have seen outflows from the Bitcoin ETFs. Some people, I think, have dramatized the headline. They've said, oh, $4 billion of outflows. It's a catastrophe. It's horrific. Well, let's have a look. Because I want to look at the assets under management. Daily flows is something that we can look at. Daily flows is important. But assets under management is the signal. If I were to get a chart that zoomed all the way out to as far as I wanted it to go out, it actually doesn't look as horrific as this chart looks like. The chart's not doing me any favors. But the amount of capital that's actually flowed out of the ETFs, it's like 5 to 6%. IBIT's still holding 784,000 coins. Fidelity's still holding 220,000 coins. The Bitcoin price is down 50%. The ETFs hardly drew down more than 5% in total assets under management. But let's put that to the side. Because Citigroup is one bank who, again, as Bitcoin is climbing higher, decided to come out, publish a little bit of FUD. But they're not the only. We told you we got a clip coming from Chamath Palihapitiya. I think before I get to that, might want to pause, take a break. I might need a little bit of a drink if I'm going to sit here and yap for you guys for another hour. And I want to once again thank our show sponsors who make these shows possible. Let's start with the Bitcoin Well, and then we're going to...
Today's episode is brought to you by Bitcoin Well Infinite. If you're a serious Bitcoin buyer, you've probably hit the same wall. Most platforms make you give up custody just to play by the rules. Bitcoin Well Infinite fixes that. They're North America's only publicly traded non-custodial OTC desk listed on the TSX Venture Exchange, which means transparent operations and zero counterparty risk.
You buy Bitcoin, you take immediate control, period. For trades over $50,000, you get a dedicated executive Bitcoin advisor, competitive spread starting at 1%, and immediate delivery straight to your own wallet. No custody risk, no withdrawal fees, just institutional grade execution with full asset control. If you want to buy Bitcoin the right way, book a free consultation at bitcoinwell.com/OTC or email infinite@bitcoinwell.com.
I want to give a shout out to our partner, Stampseed. Is your Bitcoin in cold storage really secure? Are your seed phrases really secure? Stampseed's do-it-yourself kit has everything you'll need for you to hammer your seed words into commercial-grade titanium plates instead of just writing them down on paper. Paper is fragile. Titanium plates are strong. Your words are actually stamped into the titanium plate with this hammer and these letter stamping tools. Once the words are in, they aren't going anywhere. No risk of the plate breaking apart and pieces falling everywhere. Titanium stamp seeds will survive nearly triple the heat produced by a house fire. They're also crush-proof, waterproof, non-corrosive, and time-proof. And now you can customize your titanium seed plates. You can upload your design or logo and they will laser engrave it on the back of your seed plate, the opposite side of where the words are. Stamp your seed on Stampseed and use promo code SIMPLY to get 15% off anything on the stampseed.com store.
Okay, so we've talked about Citigroup. Let's talk about someone else who I think we need to talk about. I mentioned him in the intro, Chamath Palihapitiya. Coincidentally, this week, he's spreading a little bit of Bitcoin FUD himself. And again, he's a very connected man. I'll play you a few clips to show you just how connected he is in a moment. But I want to start by looking at, a high level. What's he talking about? Because he published this mega viral tweet thread this morning. It's talking about what a lot of people are talking about. The collapse of terminal value. What happens if AI makes every moat temporary? And you're going to see a response from Michael Saylor in a moment to this viral article. And I'm going to show you some of the most important pieces that Chamath did hit on. You can see Michael Saylor started a little bit of a back and forward with Chamath this morning. It was yesterday morning on Twitter. But before we dive into all of that, I want to play you a recent clip that I saw from Chamath. That was yet again just another one of those head scratchers. Again, the man's been positive on Bitcoin for 13 years, but this most recent clip, he seems to have changed his tune a little bit. So let's listen into what Chamath has to say about Bitcoin now in 2026.
I think the reality is that Bitcoin, for the most part at this point, is there's a structural failing in Bitcoin that I think people will need to come and wrap their heads around. The structural failing is that it is not. So if you think about like what is the value maximizing function right now for a crypto asset to be broadly adopted, it needs to have the features that allow a central bank to adopt it. And there are two things that it lacks. One is fungibility and two is privacy. And so Bitcoin fails on those two dimensions. So it can never be a structural holding of a central bank. Mm-hmm. And that simple thing will keep it in the realm of ETFs and humans. And
does gold satisfy those conditions?
Yeah.
Fungibility, but not easily.
Both. You have no idea how much the Bank of China owns. You don't know how many ounces they own. You don't know how many ounces I own. When there's a public ledger that says this address has this much, and you can't really trade it because you know the history and the provenance of that exact token. It's been used to buy this. It was transacted over here, went to this wallet. That lack of fungibility and privacy is a huge deterrent for broad structural adoption. That's what you need to then add another 10x of market cap. Mm-hmm. So is there room for a different crypto asset that solves for the privacy and fungibility? Yeah. And are there projects right now? Yes, but they're very small scale. There's huge issues with them. Those are even more volatile. So Bitcoin's interesting.
Hold on to there with Chamath, who is now saying some really interesting things about Bitcoin. So that's what he's saying in 2026. Now we're going to dive into everything he said in a moment, but I want to first play a clip from his 2013 talks on Bitcoin, because as you're going to gauge, something seems to have changed.
And in financial services, Chris talked about it earlier, but Bitcoin and things like it is the equivalent of the red pill. Okay? We are entering a completely world of uncharted water right now.
Have you made any investments in Bitcoin?
So, I own Bitcoin in my hedge fund. I own Bitcoin in my fund. I own Bitcoin in my private account. It is a huge deal. It's a huge, huge, huge deal. Because what you're talking about right now is for the next 3 to 5 years, an unbelievably better store of value. It is gold 2.0, right? The value of gold that hedges the world economy about $9 trillion, right? $1,300 an ounce, of which only $100 to $150 is the actual production value. So all the rest of it is imputed. Where, Lena, you and I have decided that it's worth $1,300 an ounce. Well, guess what? I can do the same thing with Bitcoin, except now I can do it outside the purview of every single government. It's being used everywhere where you would think it would be used. Russia, Iran, Iraq, Egypt, Venezuela, Argentina, everywhere where you have currency pressure, everywhere where you want to basically shield your assets. And then after that, it'll probably become a payment mechanism. So in all of these three industries, you're talking about trillions of dollars up for grabs. Up for grabs, right? And it's just about trying something.
Right.
And taking a few months to understand what the opportunity is and then hit the scene.
So that was Chamath circa 2013. Very different sounding Chamath to 2026. And again, him coming out and publishing this article yesterday and promoting and spreading that FUD about Bitcoin last week in the clip that I played for you guys. All of this, again, takes me back to that chronological timeline. Why now? Why in the same week that Citigroup has strangely changed their Bitcoin opinion? These are the type of things I like to keep an eye on. Now let's analyze what Chamath said to see whether there's any truth in his FUD spreading of Bitcoin. So he said central banks don't want to hold Bitcoin. They only want to hold gold. Let's have a look. Let's be charitable. Let's see whether that is a true statement or not. So we do know that, yes, central banks have been buying a lot of gold recently. I have a couple of charts to show you. For the first time in 30 years, central banks now hold more gold than they do US treasuries. Gold is obviously having a parabolic bull market. It's above $5,000 a coin. We get it. Central banks are buying. Like Chamath said, we have no idea how much gold the Central Bank of China has. He says he has a lot of gold. But even Chamath, he doesn't know how much gold he has because you can't verify it. This is, again, some of the things that he was nearly alluding to in 2013. Why does he seem to not understand what he said in 2013 in 2026? Now, he said central banks don't want to hold Bitcoin. This chart's a little bit zoomed out, but I think you can get the picture. We have governments all around the world with massive Bitcoin bags. China, their government, 194,000 coins. America, who knows how much Bitcoin they have, but it's over 200,000 by this chart. The UK still sits on 61,000 Bitcoin despite all of their repeated attacks on Bitcoin. And then we've got other countries like El Salvador, Venezuela, Ukraine, Finland, the Kingdom of Bhutan, and Georgia. And we do know, even more recently, some people will say, but Luke, they're governments. What about central banks? Well, just recently, in late 2025, let's forget the Czech central bank. They bought $1 million of Bitcoin for quote unquote asset testing. And this is the same central bank that got attacked by Christine Lagarde for even floating the idea in 2025. We can see, let's remind you of that, because I'm going to show you that a lot of people say that $1 million purchase is, well, it's not significant. And that's a fair take. But remember, they were kind of slapped. We can see ECB's Lagarde slaps down the Czech proposal for Bitcoin reserves. This is in January 2025. She came out and she said in a clip that I'm not going to play for you today because I have too many clips to play for you. But she said, I am very confident. I spoke to the Czech central bank. They won't be putting any Bitcoin in their reserves. Bow, bow, bow. 11 months later in November, they went ahead and bought it anyway. So they're not the only central bank that came out and bought Bitcoin. We know El Salvador. We know that there's even more recently, we have the Central Bank of Kazakhstan not only buying more Bitcoin, but let's have a look at this headline. I just want to show this so you guys know I'm not just pulling this out of nowhere, but they actually sold gold to buy Bitcoin. So this is literally the absolute opposite of what Chamath is saying. Chamath is saying, I'm not bullish on Bitcoin anymore because central banks want gold, not Bitcoin. Wait on a minute. We have central banks, admittedly not the biggest ones, I get that, but we have central banks selling gold to buy Bitcoin. This is a real headline, and this is kind of wild, and it's headlines like these. Again, this is just 2 weeks ago, March 6th. These headlines going missed by most people is what I think is going to accelerate a lot of this FOMO that we're seeing develop behind closed doors. I want to talk about all of that FOMO in a moment, but before I get there, I want to take one more break and once again shout out our incredible sponsors who make these live streams possible. And then we're going to get back into looking at what I think is happening this year with the whole BlackRock strategy. I think there's a race developing and no one's focusing on it. So let's dive into that next section in a moment.
I want to give a shout out to our partner, HIVE Digital Technologies. Fueled by clean energy, HIVE has quadrupled its global Bitcoin mining footprint and channels that same scale into high performance compute, where their AI cloud is now ranked #1 in the world for network performance. At HIVE, you've got dual engines, Bitcoin and AI humming, roaring, accelerating in unison. They're lean and mean, they're green and clean, and they're rewriting the playbook on sustainable digital infrastructure. You can catch the latest buzz at HIVE Digital Tech or at hivedigitaltech.com. I want to give a shout out to our partner, Ledn, the leader in Bitcoin-backed loans. Ledn lets you unlock the liquidity in your Bitcoin without ever having to sell it. Since 2018, they've issued over $10 billion in loans to more than 10,000 customers worldwide. I love these guys, and not only do I have an account with them, I also have a loan. And here's what really sets them apart. There are no monthly payments, and you can pay back the loan at any time. Once you send your Bitcoin as collateral, you can have cash in your account within 24 hours. Ledn has over 1,000 five-star customer reviews, and they've never lost a single dollar or single sat of customer funds. So if you want to tap into the wealth of your Bitcoin without having to sell it, head over to learn.ledn.io/simply today and you'll get 0.25% off your first loan. I want to give a shout out to our partner, sat123.com. Sovereignty isn't just about your money. It's about your communications too. When the grid goes down, most people go dark. Cell towers fail in hurricanes, cyber attacks, and blackouts. But satellite phones, they don't rely on local infrastructure. Iridium has 77 satellites in orbit, giving you a direct line anywhere in the US, even offshore. If you hold your own Bitcoin keys, you should hold your own comms too. Sat123.com also has everything you need to start building your Bitcoin citadel. Starlink, battery backups, Faraday bags to protect your hardware wallets, and much, much more. It's a one-stop shop for anyone serious about resilience and off-grid independence. Stay connected, stay independent, stay sovereign. Go to sat123.com/simply today and use promo code SIMPLY to get 15% off anything on the store. I want to give a shout out to our partner, BitKey. If you already self-custody your Bitcoin, you know the deal with hardware wallets by now. Complex setups, clumsy interfaces, and a seed phrase that can be lost, stolen, or forgotten. BitKey fixes that. BitKey is a multi-sig hardware wallet built by the team behind Square and Cash App. It packs a cryptographic recovery system and built-in inheritance feature into an intuitive, easy-to-use wallet with no seed phrase to sweat over. It's simple, secure, self-custody without the stress. Time named BitKey one of the best inventions of 2024. Get 20% off at bitkey.world. That's BITKEY.world with the code SIMPLY.
Okay, guys, we are back. I want to cover a few more very important topics for you. So today we've been looking at all of the attacks that coincidentally have come out this week on Bitcoin. I want to show you what's been happening behind closed doors, because we got a really interesting headline once again this morning that I want to kind of walk you through and show you maybe a hypothetical thought experiment of where this goes. What is the end game? What is happening, and why are we seeing strategy accumulate Bitcoin at a rate we've never seen before? Because a lot of people now are starting to ask the question, okay, we've got how much Bitcoin left to mine. We did recently see that the 20th million Bitcoin was mined, I think, earlier in the week. So think about that for a moment. 21 million Bitcoin will ever exist. 20 of those have already been mined. Michael Saylor says that we are living through a digital gold rush. This is what Michael Saylor says we're living in right now. And we're seeing something kind of interesting. We're seeing Bitcoin now normalize much higher prices. I want to show you this little graphic because I thought it was really... Apologies if that audio was super loud. But what we're seeing is Bitcoin quietly normalized 50, 60. We spent a couple of hundred days above $100,000, I believe. And now we've got some significant buying pressure stepping in while everybody's quietly, suspiciously turning negative on Bitcoin. Just as the Bitcoin buys increase, just as we're seeing more flows into the Bitcoin ETFs, we're all of a sudden seeing the MicroStrategies, the BlackRocks, quietly buy a lot of Bitcoin. And this is kind of interesting. I saw a headline earlier today that said that strategy is actually going to overtake BlackRock and potentially be one of the biggest Bitcoin holders in the world. So I want to break down what that might look like, because they are right now closing in on 1 million coins. And this price chart, this little graphic and the visualization I'm showing you right now, it's important to keep in the back of your mind, because if Bitcoin has now normalized $50,000 to $100,000 a coin, that now makes the math a little bit more difficult. Again, if Bitcoin's at 100,000, how difficult is it going to be for an entity to buy 1 million coins and overtake a BlackRock or a MicroStrategy. It's nearly impossible. It's essentially a 2-horse race right now. Because we're going to have a look in a moment, there's somewhere around 2 to 2.5 million Bitcoin sat on exchanges. And that number's been just constantly dropping like a rock for the past 5 to 6 years now. We're in a new environment. We're in an environment where there's just not that much Bitcoin left. And I think looking at the power struggle between BlackRock and Saylor, I think this is going to get even more interesting as the years pass. So right now, again, this week, while there's coincidentally all these bearish headlines on Bitcoin, Strategy is using its new product Stretch to accumulate a ton of Bitcoin. We talked about this yesterday, so we won't completely rehash it all. But I saw this headline come out. Stretch may help Strategy reach 1 million Bitcoin before BlackRock. This really got me thinking. Look at how this trend is accelerating. It's kicking up like a hockey stick. You can see a lot of these big orange circles on Saylor Tracker. They're increasing. They're getting bigger, which is good to see. Maybe Michael's now buying the dip a little bit more aggressively. But his last 2 buys were 18,000 Bitcoin and 22,000 Bitcoin. He bought 40,000 coins in the past 8 days. Think about that for a moment. Right now, he's sat on 767,000 Bitcoin. You can see that in the top left-hand corner of your screen. If he keeps buying 40,000 Bitcoin every 2 weeks, that would be 80,000 coins a month. And that would mean if he's starting right now at 761,000 coins, Saylor's going to have 1 million coins before August. Think about that for a minute. That changes a lot of things. That changes BlackRock's plan to be number 1. You can see people are now starting to recognize this. Strategy just snapped up $1.57 billion of Bitcoin. It's narrowing the gap with BlackRock's IBIT Bitcoin ETF. Strategy's raised $1.58 billion through equity sales. We can even, if you want to be more conservative, you can see Strategy's latest purchase over 3 times. Its recent 4-week average is 6,000 Bitcoin. You want to be a bit conservative, you can zoom out a bit. I'm more interested in how Stretch is getting increasingly, let's say, more popular, and it's seeing a lot more demand. And now this kind of leads us back to the article we didn't really show you. We didn't really show you the boxing match between Michael Saylor and Chamath Palihapitiya. So let's go back to that, because I think it's interesting to not only just look at the intellectual sparring matches that we do see online, but again, just ask yourself, why Chamath? Why now? Is there a valid reason for him, like Citigroup, to all of a sudden start spreading Bitcoin FUD this week? I don't know. But this is the article that caused a lot of a stir online. Yesterday, got 1 million views. The collapse of terminal value. What happens if AI makes every moat temporary? And what's interesting about this specific article, he's talking about assets. He's talking about businesses. He's talking about bonds. We can see, to understand the magnitude of such a change, consider where we stand today. The S&P 500 is trading at roughly 22 times earnings. Top technology companies trade at 30 to 60x multiples. High growth SaaS companies have commanded 8 to 20x revenue despite near zero cash flow. This is because the market was paying for the empire they would eventually build. But for most of these businesses, 60 to 80% of their equity value lives not in what they earn today, but in the terminal value, the discounted sum of cash flow in years 10 and beyond. And this is obviously where his AI thesis comes into it. This is the next article. This is the next little section I want to show you. The aggregate S&P 500 market cap today sits at 58 trillion. Corporate free cash flow from operations for the index runs at roughly 2.8 trillion annually. Repriced at a 5x multiple, you're looking at an equity market worth 14 trillion, a drawdown of 75% from current levels. At the low end of the range, 2x free cash flows, the losses are nearly total. Even at the generous end, 7x, roughly 2/3 of all equity wealth ceases to exist. To put that in context, the 2008 global financial crisis erased around $10 trillion in wealth at its worst. This scenario of AI erases multiples of that across every asset class in every country simultaneously. He says growth investing dies. And this is the interesting thing. He says capital rotates to the physical world. Okay. So he says, this takes us back to our clip we were looking at. Gold performs. Short-term government credit holds up. The rotation away from equities would reshape everything from pension fund asset liability matching to the basic 60-40 portfolio, which quietly stops making sense in this this world of AI that Chamath Palihapitiya is kind of painting. So this is where Michael steps in. And he says, if AI compresses terminal value and makes every moat temporary, capital will rotate into assets with no disruption risk. Bitcoin is digital capital, scarce, neutral, and impervious to AI disruption. Bitcoin should be the primary beneficiary of this shift. Chamath says Bitcoin would need to be quantum resistant by then. Just kind of sounds like a... Did he even read Saylor's response, or is he just spewing propaganda? I don't know. Michael says, your AI thesis assumes the digital world is quantum resistant. If quantum breaks cryptography, it breaks AI, cloud infrastructure, banks, and the internet. Not just Bitcoin, the entire stack upgrades together. And Chamath has left that one on red for a week. Boy. Kind of telling. To me, it's not necessarily telling. It's more of a red flag of something deeper. If you think about this from first principles, we saw the clip of Chamath and how eloquent he was in his Bitcoin arguments and understanding 13 years ago. He had it privately. He had it in his hedge fund. He could talk well about Bitcoin 13 years ago. If you think about this from first principles, why is he not even engaging in the discussion with Michael on Twitter? Think about that for a moment. If he was really, it looked like he was pretty genuine 13 years ago. He sounded like he owned a ton. He sounded like he owned a ton in his hedge fund. If he had genuine concerns about Bitcoin, why didn't he have a back and forwards with the man who owns $60 billion of Bitcoin? I thought they were pretty genuine questions and responses that Michael asked, but Chamath looked like he just spewed out a ChatGPT generated NPC talking point. BTC would need to be quantum resistant by then. Didn't even address what Michael said, which, by the way, correctly addresses all of the concerns and FUD laid out in this article. And then he didn't reply when Michael once again made objectively a great point. This is where you've got to once again start entertaining other thought experiments. Again, I walked you through some thought experiments as to maybe why Citigroup did the backflip that they did when they did. sometimes you've got to start entertaining what some people will call conspiracy theories. Again, the fact that JP Morgan, Jane Street, they get completely busted. They get caught with their hand in the cookie jar. My base case is maybe somebody tapped Citigroup on the shoulder and said, hey, we need to spread some FUD. This Bitcoin thing's getting away from us. It's decorrelating from the markets. It's acting like a safe haven. We can't have that. Not yet, because we haven't finished filling our boots. It's just an idea. It's just a thought experiment. Love to know what you guys think in the chat. But then the same goes with Chamath. Why does he come out the same week when Bitcoin's performing pretty well and recycle the same old FUD that's been addressed 10 years ago? I want to play another clip for you guys. I think it's an interesting one. Let's listen into something else Chamath has said previously about how the world really operates.
There's about 150 people that run the world. Anybody who wants to go into politics, they're all fucking puppets, okay? There are 150 and they're all men that run the world, period, full stop. They control most of the important assets. They control the money flows. And these are not the tech entrepreneurs. Now, they are going to get rolled over the next 5 to 10 years by the people that are really underneath pulling the strings. And when you get behind the curtain and see how that world works, what you realize is it is unfairly set up for them and their progeny.
Very illuminating clip. I see a couple of you guys in the comment section have come to the same conclusion that I have. Somebody got to him. Citigroup is a $21.5 trillion bank. If you join late, I encourage you to rewind. Watch the stream from the beginning. We covered all the receipts. Citigroup, actually, I could make an argument they hold even more assets than that. Let's have a look. They're enormous. I was shocked when I saw this myself. Between 21.5 trillion to 31.4 trillion. I wanted to be conservative for the title for you guys today, and I chose the lower number. But this Citigroup, Chamath, kind of makes you ask the question, why now? Jamie Dimon's FUD got exposed. Jane Street got exposed, and then we get trotted out with the same old propaganda. I don't know. That's what's on my mind today. Again, once again, if you own Bitcoin in self-custody, all of this is noise. I think all of this is a lot more reasons to own Bitcoin in self-custody and put it in your own self-custody. This is what we've been talking about here on Simply Bitcoin for, 6 years now? So again, if you're not subscribed, make sure you're subscribed. I might end this little rip here. We will be back to more regular programming in the not too distant future. Stay tuned for that. I hope you we're going to keep this stream to under an hour. I won't subject you to any more of my rambling and rants. I'll wish you all a happy Tuesday, and I'll see you all in the next one.
Today's episode was brought to you by BitcoinWell.com, a Bitcoin-only platform on a mission to enable financial independence.